Now you're going to close off your trading stock account, and that will look like this. 55,800, of course, is the biggest side. 55,800 for your trading stock there. 55,800. And then on March the 1st, balance brought down is the smaller amount of 5,4,200. So that means that we are going to start our next year. The stock in the storeroom and the stock, the value of the stock in the books, the same again. So there's your trading stock deficit. You show your new balance on this side. You show your new balance on this side. You subtract the two, and then you've got your trading stock deficit. Assets is minus 1,600 Rand. 1,600 Rand because our trading stock become less. And owner's equity is minus 1,600 because that trading stock deficit become more, and the more expenses, the less your owner's equity, and that is basically your trading stock deficit adjustment. Okay, the second one is trading stock surplus. Okay, this is the opposite. This is exactly the opposite of what we just did. The value of the stock according to a physical stock taking is more than the value of the stock in the books of the business. Okay, now you can ask me reasons for this. Reasons for this is not theft, not somebody sneaking in at the storeroom and put things on the shelves. No, the main reason for that is this is stock purchased but not recorded in the books. So we bought some stock, we put it on the shelves, and we don't record it. Also, incorrect bookkeeping, incorrect calculation of selling price or cost price, errors and omissions. Trading stock surplus. There's our example. According to the pre-adjustment trial balance, the balance of the trading stock account is 51,200. 51,200 on the 28th of February. So now we've got total new figures there. So 2019. February 28, balance brought down 51,200. According to our books, a physical stock take on the 28th of February revealed that trading stock worth of 52,000 Rand is on hand. 2019, February 28. Now you can put the balance there. The new balance carried down is more than in our books. So you take your calculator, or you just balance this account. You just balance this account. So on the one side we've got 52 there. We've got 52 there, and on your calculator 52,000 minus 51,200 gives us 800 Rand. 800 Rand trading stock surplus. This is a good thing. Not a good thing that you didn't record the things in the books, but this is not a bad thing. Trading stock surplus. Remember, all the adjustments are GJ. On the credit side of trading stock surplus, we've got there 2019, the last of the year, February 28, trading stock. GJ, 800 Rand. Trading stock, 800 Rand. This is an income for the business. This is an income for the business. You can see the plus is on that side. So this is an income for the business. It happens, not as often as the trading stock deficit, but there can be a trading stock surplus in your books. Accounting equation. plus, can you see that we put the plus on the debit side of the trading stock? Plus 800 Rand. Your trading stock becomes more. And plus 800 Rand there, because your trading stock surplus is an income, and the more income we've got, the more owner's equity we've got. Number 3, consumable stores on hand. I mentioned that this is an asset for the business, consumable stores on hand. Stationery, packing material and consumable stores not used or remaining at the end of the financial year is your consumable stores on hand. Stationery, packing material and consumable stores. That is things that you can do a physical stock taking on them. That means that you bought a lot of boxes and bubble wrap and all these things and you don't use it. So you can count it. And the moment that you can count it, it means that you don't use it. That's why you've got it remaining. That's why you can count it in your physical stock taking. And that is your consumable stores on hand. Stationery of 2,600 Rand and packing material of 4,100 Rand was purchased during the financial year. That means that stationery, we've got on the last day of the year, February 28. We've got a total there, a total of 2,600, because that was bought, was purchased during the financial year. And packing material, 2019, February 28, total brought down, and that gives us 4,100. Okay, at the end of the financial year, stationery of 400 Rand and packing material of 1,000 Rand was on hand. That means if it's on hand, then we didn't use it. So now you go to the minus side of your stationery and you take out the 400 Rand there. You take out the 400 Rand and you take it on the last of the year to consumable stores on hand. Remember, you're not allowed to do abbreviations. You must write it out. You take the 400 Rand of the stationery that you didn't use to your consumable stores on hand. Your consumable stores on hand is a B account. It's a B account and it is an asset for the business because it's stock. It's the same as stock. You count it. You count it according to a stock taking. So on the debit side of consumable stores on hand, on the last day of the year, February 28, on the last day of the year, we put the stationery, 400 Rand. So what was the amount of stationery that we used? What was the amount of stationery that we used? It is your 2,600. It's your 2,600 that you bought minus the 400 that we don't use. So we basically used stationery throughout the year of 2,200, and that you're going to take to profit and loss. That's a closing transfer. You close your stationery off to profit and loss. So that amount is the amount that we used. Packing material, 1,000 Rand, 2019, February 28, consumable stores on hand, 1,000 Rand, sorry, 1,000 Rand of that 4,100 Rand we didn't use. That we are going to put in our consumable stores on hand as packing material. because we can count it. It's like stock for the business, and then you close off your packing material to your profit and loss account, and your profit and loss account is your expense for the year. So the profit and loss account is basically whatever we used. 4,100 there. So we take to the profit and loss account $3,100 was the amount of packing material that we used.